The price of lumber shot up dramatically during the pandemic because of all kinds of supply chain issues on top of really high demand from home builders and remodelers. It has come down slightly in the last month or so, but it's still about 275% higher than it was pre-pandemic. And that means much higher costs for the builders, which then they're, of course, passing on to home buyers. Lumber prices are so high right now that some builders are actually delaying putting up the houses because they don't want to build at such a high price. Some builders are also doing what's called escalation clauses, which we normally see in the existing home market. That is, that a person who wants to buy a home will say, oh, I'll offer this price and I would escalate up to this price. Well, in the new home market, builders are now saying, we'll sell you this home for this price, but it could actually cost X amount more if our prices for lumber and other commodities rise by then. And believe it or not, buyers are agreeing to that because they want the homes that badly. One interesting thing that's coming up with the builders now is that they're saying that the appraisals for their construction loans are not meeting the actual prices of houses. So what that means is for smaller builders who actually make up 2/3 of the housing market, they have to get a loan to build a house. And just like when you're buying a house, they go to the lender, they say, we're going to put up this house and we expect to sell it for this price. Well, prices are rising so quickly that those appraisals are not matching up, which means the builder is either going to have to put in more equity of their own, or they're not going to be able to build the house because they won't be able to get that loan. For buyers, what this means is that prices of newly built homes are just rising faster than ever before. We're seeing 20% increases year over year in the median home price for new construction. That means some buyers are simply being priced out. Yes, we do have near record low mortgage rates, but they're just not making up for that huge price gain. So what we're seeing now is huge demand for single family rental homes, and now those rents are rising much more quickly as well. So if you're trying to get a home, whether it's buying or renting, it's just going to be that much more expensive. This is definitely a part of that larger economic inflation story. Housing is really the leading inflator of all of this. We're seeing home prices rise, we're seeing rents rise, and what's happening then is that people get priced out, and that should eventually slow the market. But we're in a very unique market now in that there is so much demand pushed by demographics and so little supply that there's really not a lot that prices can cool off that much. What some are arguing is that the government has to get out of the mortgage business. That is, they need to stop buying mortgage-backed bonds and keeping mortgage rates so low, because if mortgage rates were to rise a bit, that would probably take the heat out of some of these home prices.